preparing for a fund administration interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a fund administrator do, and how do they add value to an investment fund? A fund administrator is the independent operating backbone of a fund. I would maintain the books, calculate NAV, process investor activity, reconcile cash and positions, prepare reporting, and support audits. The value is accuracy, timeliness, and control. Investors need reliable statements, managers need clean data for decisions, and regulators expect proper records. A strong administrator reduces operational risk while letting the investment manager focus on portfolio performance. While answering, focus on the administrator as an independent service provider, covering accounting, NAV, investor servicing, reconciliations, reporting, controls, and audit support, not as the investment decision maker. Question 2. Walk me through how you would calculate the NAV of a fund. NAV starts with valuing the fund's investments at the reporting date. I add cash, receivables, income accruals, and other assets. Then deduct liabilities such as expenses, management fees, payables, financing, and performance fees if applicable. I would reconcile positions in cash to brokers and custodians, post subscriptions and redemptions, review pricing exceptions, and then allocate the net assets across investors or share classes. The final output is NAV per share or partner capital. Make sure to cover asset valuation, liabilities, income and expense accruals, investor activity, fees, reconciliations, review procedures, and the final NAV per share or partner capital balance. Question 3. How is fund accounting different from corporate accounting? Corporate accounting focuses on operating performance of a business, while fund accounting focuses on valuing a pool of investments and allocating results to investors. In fund accounting, fair value, NAV, investor capital, subscriptions, redemptions, carried interest, and management fees are central. The accounting must follow the fund documents as much as generally accepted accounting principles or international financial reporting standards. Timing is also different because NAV may be produced daily, monthly, or quarterly with tight investor reporting deadlines. In your answer, talk about fair value measurement, investor capital accounting, NAV frequency, allocation rules, fund documents, fee calculations, and the stronger emphasis on reconciliation and external reporting. Question 4. If your cash reconciliation does not agree with the custodian, how would you investigate the break? I would first identify whether the break is timing or error. I would compare our ledger to the custodian's statement transaction by transaction, checking trade settlements, subscriptions, redemptions, bank charges, interest, dividends, FX conversions, and wire activity. If it is a timing item, I document it and ensure it clears. If it is an error, I correct the source posting with support. I would escalate material or aged breaks before NAV is released. Be sure to mention comparing transactions, timing differences, bank fees, unsettled trades, FX movements, income receipts, duplicate postings, escalation, documentation, and avoiding forced adjustments without evidence. Question 5. How are subscriptions and redemptions processed in fund administration? Subscriptions and redemptions are investor capital movements processed under the fund's offering documents. For a subscription, I would confirm documents, KYC status, cutoff timing, cash receipt, and the applicable NAV before issuing shares or recording capital. For a redemption, I would validate the request, calculate proceeds using the dealing NAV, check gates or lockups, and process payment. The investor register and confirmations must match the accounting records. While answering, focus on investor dealing dates, KYC and AML checks, cash receipt or payment, share issuance or cancellation, NAV dependence, investor registers, and confirmations. Question 6. How would you calculate management fees and performance fees for a fund? Management fees are usually calculated as a percentage of NAV, committed capital, or invested capital, depending on the fund documents. I would apply the annual rate over the accrual period and record the payable. Performance fees are more sensitive because they may involve a high water mark, hurdle rate, loss carry forward, or crystallization date. I would model the calculation, compare it to prior periods, review investor-level allocations, and ensure the fee agrees to the legal documents. Make sure to cover fee base, annual rate, accrual frequency, crystallization, high water marks, hurdle rates, equalization, fund documents, and independent review before NAV finalization. Question 7. How do you approach pricing a security when there is no readily available market price? When a market price is unavailable, I would follow the fund's valuation policy. I would check approved pricing vendors, broker quotes, comparable securities, recent transactions, and any manager-provided valuation support. The key is not just accepting a number, but challenging whether it is reasonable and properly approved. Illiquid pricing should be documented, reviewed by the valuation committee if required, and flagged in NAV controls. Good valuation support protects both investors and the administrator. In your answer, talk about valuation hierarchy, pricing sources, broker quotes, manager marks, valuation committee approval, stale prices, reasonableness checks, documentation, and independence from portfolio management pressure. Question 8. Explain the trade lifecycle from execution to inclusion in NAV. After a trade is executed by the investment manager, it is captured in the administrator's accounting system from trade files, broker confirms, or order management feeds. I would verify key details such as security, quantity, price, trade date, settlement date, commission, and currency. The trade updates cost, positions, cash, realized gains, and exposure. Before NAV, positions in cash are reconciled to brokers or custodians. Any failed or unmatched trade must be investigated quickly. Be sure to mention trade capture, confirmation, settlement, position updates, cost and realized gain recording, broker reconciliation, failed trades, corporate actions, and impact on market value. Question 9. How would you handle a corporate action in fund accounting? I would first understand the type of corporate action, such as a dividend, stock split, merger, tender offer, rights issue, or spin-off. Then I would verify the event details against custodian notices and market data, including record date, ex-date, payable date, ratio, and currency. The accounting impact could affect cash, cost, quantity, income, or realized gain. After posting, I would reconcile positions and cash to ensure the NAV reflects the event correctly. While answering, focus on identifying the event, understanding mandatory versus voluntary actions, validating custodian data, accounting impact, position and cash updates, income treatment, and NAV review. Question 10. How do expense accruals affect NAV, and what controls would you apply? Expense accruals ensure NAV reflects costs incurred, even if invoices have not been paid yet. Typical accruals include audit, administration, custody, legal, directors, and management fees. I would use contracts, budgets, prior invoices, or agreed fee schedules to estimate amounts, then true them up when actual invoices arrive. Controls include approval checks, reasonableness versus prior periods, and review of unusual movements. If expenses are missed, NAV and investor returns are overstated. Make sure to cover matching principal, recurring fund expenses, invoice validation, accrual estimates, reversals, materiality, budget comparison, approval workflow, and how understated expenses overstate investor NAV. Question 11. How are capital calls and distributions recorded for a private equity fund? In a private equity fund, investors commit capital upfront, but cash is drawn through capital calls. When a call is issued and funded, I would record cash received and increase the partner's capital account, while reducing unfunded commitment tracking. Distributions may represent return of capital, realized gains, income, or recallable amounts. The classification matters because it affects reporting, IRR, remaining commitment, and potentially the carried interest waterfall. In your answer, talk about commitments, unfunded capital, drawdown notices, cash receipt, partner capital accounts, return of capital, gains, income distributions, and waterfall implications. Question 12. What is equalization or series accounting in a hedge fund, and why is it used? Equalization and series accounting are methods used to make performance fee allocation fair when investors enter it. If one investor subscribes after gains have already occurred, they should not pay fees on performance they did not earn. Series accounting creates separate share series for different dealing dates, while equalization uses credits or adjustments to align fees. The goal is accurate investor-level NAV and fair treatment under the fund documents. Be sure to mention fairness between entering and existing investors, performance fee allocation, different subscription dates, high watermarks, series shares, equalization credits, and investor-level accounting complexity. Question 13. How do you allocate a fund's profit and loss across investors? Profit and loss allocation depends on the fund structure. For a share class fund, gains and losses are usually allocated through NAV per share, adjusted for subscriptions and redemptions. For a partnership, I would allocate based on capital account percentages or terms in the limited partnership agreement. I would also consider different fee classes, side pockets, series, and investor-specific terms. The important point is consistency with the governing documents and full reconciliation to total fund profit and loss. While answering, focus on ownership percentages, share classes, capital account balances, subscription and redemption timing, fee terms, income allocation, side pockets, and compliance with offering documents. Question 14. What controls would you perform before releasing a monthly NAV? Before releasing NAV, I would complete core reconciliations for cash, positions, trades, and investor activity. I would review pricing exceptions, stale prices, large profit and loss movements, FX rates, income, expenses, and fee calculations. I would compare NAV movements to market performance and prior periods to spot unusual items. A maker-checker process is essential: preparer, reviewer, and sometimes manager approval. The NAV should not go out until material breaks are resolved or clearly documented. Make sure to cover cash and position reconciliations, pricing checks, profit and loss reasonableness, fee calculations, investor activity, expense accruals, variance review, maker-checker approval, and sign-off evidence. Question 15. Tell me how you would manage a tight NAV deadline when several issues are still outstanding. I would first prioritize issues by materiality and NAV impact. A small immaterial timing break can be documented, but a large unresolved pricing or cash issue must be escalated immediately. I would communicate clearly with the investment manager, custody team, and reviewer, setting deadlines for evidence. If an estimate is needed, it must be supportable and approved under policy. My goal is to meet the deadline without compromising NAV integrity or investor confidence. In your answer, talk about prioritization by materiality, communication with managers and internal reviewers, documenting open items, escalation, avoiding unsupported estimates, and protecting accuracy over speed. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.